if you're new to this, if you're new to hanging out with me, you definitely want to take a look at these three stocks. And then I'm going to tell you what we've been doing with them. So first is Synopsys, all right, SNPS. This is a major American software company, all right? They focus on what's called EDA, electronic design automation, all right? They also focus on semiconductor and IP, which is intellectual property. And then they also focus on major chip designs. So every chip maker out there, NVIDIA, AMD, Intel, Apple, Qualcomm, they all rely on Synopsys tools. That's why they're an important part and they're one of the big stocks that I look at. The next one on the screen is right down here in the middle. That's Meta, okay? And we just talked about Meta not too long ago. Meta is one of the world's largest technology companies. You know that. They are, I still call them Facebook, but they are now an umbrella. All right, the umbrella is Facebook, Instagram, WhatsApp, Reality Labs. They basically build products to help people communicate. Right? They started with social media, and now they're going across both digital and immersive environments. And number 3 down there at the bottom, that's the Qs. All right, one of the most popular exchange traded funds in the market. I just talked about that before our little break. That tracks the NASDAQ 100 index. Okay. Which is 100 of the largest non-financial companies listed on the NASDAQ. Now, what do these all have in common? Well, I'll tell you what they all have in common. We've mentioned them all here before in recent weeks. So what I want to do is I want to take a look at them again and see if we could put them on the replay, kind of like your favorite song. All right, so for that, what I want to do is I want to pop over and move forward. Let's start with Meta. How has it done from 2016 all the way to 2025? And if you can see here, every year, this stock in 2016, Meta went up the 60 days following mid-April, about 6.73%. And in 2017, it went up 5.7%, 20% in 2018, 10% in 2019, 36% it went up in 2020. A lot of things went up in 2020 after, getting into the April timeframe. 2021, it went up 12%. 2022 was down 21%, and that was during the bear market that we had of 2022. Last 3 years, 35%, 6%, 36% last year, and I'm talking about between mid-April and around July, the July 8th timeframe. So we talked about it last week. And if you remember last week, we talked about this chart. We talked about the chart looking kind of having that lower high, lower low scenario, but was it going to have a repeat of last year? Look what happened to Facebook, right? So here's Facebook. Here's the lows that happened in March. Here was the move up to last week. So last week, we were discussing this when Facebook was trading in that $638 range. What happened since then? 5 days later, 4 days later, actually, because last Monday to Friday, the stock was actually up, and it was up big. It was up 10.5% between April 13th and April 17th. So let's just, for splitting hairs here, let's just say 10%. What's 10% of 600 or 10% of 630? That puts you around 630, 60. It puts you around 690. Well, that's what the stock ended up doing, was getting around the $690 mark as a high on Friday. How cool was that? It made half the move. It made half of the move that we were expecting in 5 days. In literally, 5 days. 5 days, it made half that 60-day move. Sometimes when that happens, it makes sense to take a little bit of a win. But the big question is, well, if it went up 10.5% from April 13th to April 17th, what did the option prices do? So this was an entry on Meta, and I did what's called a call debit spread. Okay, so this is a call debit spread. I believe it's a 10-point spread, and I was looking at the 710 720s, and we were looking at a trade that was around 4. I ended up getting filled at 460. So when I do a 10-point spread and I get filled at 460, that means that my cost and my risk are 460. My reward is going to be 10 points minus 460. That's a maximum reward. But keep in mind, we were looking at the July 17th options. Fast forward, here's April 17th. Here we are on Friday, and I'm looking at this thing moving, and I see it very close to 8. So I put a trade in right before the close. If I can sell it at 8, I'll sell it at 8. I'll just get out of the whole thing. Look what happened. Boom, filled 8. So let me back up a second here. And this is a small number, but 920 turns into 1,600 in a few days. That's a big percentage gain. That's something I don't want to wait the other 55 days that this pattern's in. If I could take 80% of the maximum profit and take it early, then I will. All right. So that's what I did with Meta. All in all, sometimes replaying the same thing is the right thing to do, right? Past seasonals, well, these past seasonals I just showed you, they might be getting started. So we can replay, we can go back in and we can look at the Qs again, or we can look at Meta again, right? Because these are trades that maybe just getting started. They're just subsets of something more. Meta going to 700, to 690. Well, if I expect it to go to 730, maybe I could set up another Meta trade right now with lower cost, with lower risk, and kind of repeat the same thing. And of course, finally, planning, executing, and managing the trade. Well, those are, some of the most important things that we can do as traders.